on a day when we're talking about unprecedented levels of job losses. Let's go to New York now, check in with Kriti Gupta, who's been tracking the early market performance. Hey, Kriti.
Good morning, John. Yeah, we are seeing very strong movement in stocks to the upside. And this is interesting coming as we just had a record heartbreaking jobs number come out here in the States. 20.2 million job losses in April. That brings the unemployment rate to 14.7%. Stocks really looking past that, though, as we see some of those numbers actually coming in better than estimates. Still a very heartbreaking number. That coming alongside some comments out of the Trump administration. President Trump himself saying that he is worried about China. He's having a very hard time with the nation, and that the virus really overrides the progress that they've made on the trade deal. So some negative comments out of there. More on the economic front, you are seeing comments from the likes of Larry Kudlow, Kevin Hassett saying that there could be more pain to come. Larry Kudlow saying that perhaps the contraction isn't fully over. So despite that, you are still seeing a rally in stocks this morning.
And then maybe just, I've kind of gone in and out of this story of the headlines on the U.S. and China, and I think it's fair to say that the market reaction overall seems fairly muted, but there was one tone coming into the day, Kriti, and then things started to change based on an interview that the president was doing over the last hour.
That's right. Before pre-market, around the same time we got those jobs numbers, the headlines out of the China-U.S. news was there was a very constructive phone call between the chief negotiator, so Lighthizer, for example, and his counterpart over in China, having a very good constructive phone call on how to implement the contents of the phase one trade deal. Then we see these comments from the president saying that, well, there are actually mixed emotions here. Once again, that this issue about the virus really overriding what progress has made on the China trade deal. Remember that only the phase one part of the trade deal has actually been done. Phase two, phase three are still in the works. So this virus, of course, coming after weeks of comments of who actually bears responsibility for the virus. So we are actually seeing some tensions on that front and different mixed messages from different players in the administration.
Okay. One of the big things I've been wondering about, like all these different companies are coming out and telling us what their roadmap is for getting back to business. And it's not an easy job. I don't know how they are going to do it, especially those that are most hard hit by this. You've been talking with us a little bit this week about what's been going on in the cruise industry. You've got an update on that.
That's right. You're seeing heavy volume in the cruise stocks. That's why this industry is so important right now. Of course, it's one of the hardest hit with this pandemic lockdown. You're seeing vacations, travel really all take a hit, of course, in line with those unemployment numbers. Something to keep in mind, though, is that actually brings about a little bit of fiscal responsibility from these companies as they kind of rebalance their work, rebalance their companies, rebalance their balance sheets. Royal Caribbean is one of those examples that coming out this morning and saying they're actually forecasting all of their bookings and their travel to kind of pick up in 2021. So we're still about a year away from when that may happen. Still important to note, they're also talking about cutting back on capital expenditures, $3 billion worth of capital expenditures cutting back in the year of 2020. So Royal Caribbean also laying off 26% of their workforce. So that's telling you that they're actually taking some measures here as harsh as they may be to really conserve the cash and really make sure this company stays afloat while they weather this storm. So really an example of how some of these tourism sectors, some of these tourism companies are really trying to stay afloat.
What about on the aerospace side, where you have very similar conversations taking place on a daily basis right now? I know you've been watching Boeing as well.
That's right. Boeing shares jumping this morning and coming out on some similar lines, saying that the Boeing CEO coming out and saying that 30 to 50% of flying could come back by the end of the year. And they think that's actually a positive for airlines. So you're actually seeing airlines rally a bit this morning as well. But that being said, there's also some comments here coming from the Boeing CEO about reopening their 737 MAX factory. Now, remember, the last 2 years have been really tough for this company as they've dealt with the accidents and the investigations dealing with 737 MAX. They're saying that factory is actually coming back online, that process of kind of documenting all of that has taken a while, but they're also saying they're really ready to come back. Another positive story for this company is the fact that they're actually talking about repaying a lot of their debt. Now, remember, Boeing has a really good chunk of debt, $45 billion worth of corporate bonds. So the CEO also coming and saying, well, we're not going to issue any dividends, any buybacks until all of that debt is repaid. Something really important to note, once again, on that fiscal responsibility, you're seeing a lot of these companies suspend their buybacks, suspend their share dividends, really try to pay off their liabilities here. And that's something you're seeing in Boeing as well.
Kriti, helpful breakdown as always. Thanks a lot. You have a great weekend. That's Kriti Gupta joining us from New York with some of the U.S. stock movers. Obviously, one of the high-flying stocks here in Canada this year has been